Hello again, guys. We're here for a very special video session because it was almost 10 years ago in October that the markets worldwide started crashing. Okay, this was the great crash of 2008, and this was caused by the subprime crisis, which originated in the United States of America. And at that time, we heard a lot of terminology that we heard for the first time. Things like, credit default swaps, collateralized debt obligations, subprime mortgages being bundled, insurance policies not being paid, which caused the blow up of a lot of institutions, okay, like Lehman Brothers, Bear Stearns, talking about AIG. Hey, even Citigroup got into trouble, okay? And that was 10 years ago. But what I want to tell you that, there's another crash that's going to come this year. It's already the 10-year cycle, and I'd like you to take advantage of it. But you don't need to go inside and go to the details on all the funny terminology. You really don't need to understand the details of how the financial system works. You need to know that in a crash, in a big market crash, what instrument should you be in? And this is what my webinar on Sunday, okay, the 26th of August, 10 p.m. Malaysia time is all about. It's to help you to make money when the crash comes, as it inevitably will. So the way I look at it is that you can watch your world literally break in front of you, okay, like a broken glass, and you end up only affording filet o fish for dinner at McDonald's. Or you can start planning to travel the world to exotic places like Japan, the risk-off currency. So you've already seen what has happened this year, right? There's a certain kind of turmoil in the emerging markets. You see currencies like the Turkish lira blowing up, going up from like 5 to 7 to the US dollar. And in 10 years, since 2009, the lira, get this, okay, $1 was like 1.18 lira. And just last week, it was 7 lira, a 7 times movement in 10 years. Not only that, but other emerging market currencies such as the Indian rupee has also devalued against the US dollar, and so too has the Indonesian rupiah. So there's probably more of it coming up. So when this thing happens, and it is going to get worse, we want to know what to go in, and that is the intention. That is the knowledge that I will impart to you on my webinar on Sunday, 26 August at 10 p.m. So don't miss it, okay? So really what we have here is the US indices. This is the S&P 500, and it's been on a tear, okay, since President Trump's win in 2016. It broke the critical 2,000 level, and it's now at 2,857. It's threatening this all-time high. But if we go back, if we want to see what's happening to the markets and what happened before, if we want to predict what's going to happen in the future, let's go back to the monthly chart. And yeah, the S&P is here threatening the all-time high again. But look at what happened during the crashes, okay? During the past two crashes, this was 2008 actually, okay? This was the 2008 crash. This was the dot-com crash, 2000. And look how far it went. Here it went from around, let's look at the high there. 1,144.55, and it went to a low here of about 775. That's almost that's like a 50% move there, and if you go here, this is the high there, that small wick, that's about what, 1,538, and it went down to a low here of about 832. Again, that's about a 50% down move here and down move here. And you can expect that the next move down during this crash will be also around 50%. We might hit 3,000, so it could well end up around this area at around
1,500, which looks right, you know, because you have the basically the previous cycle highs here, okay, and this would of course be 10 years, and this would of course be around what, 17 years till now, which looks just right, okay. So if we look at what's happening to the US now, this is a good chart on the history of the US bull market since 1926 here, the bull and the bear. And if you look here at the statistics, just look here, the average bull market in the US is about 9.1 years, with an average cumulative total return of 476%, and the average bear market is 1.4 years with an average cumulative loss of 41%, which is about right. I told you that we're probably going to go down around 50%, okay? And if you look at where we are now, this is really scary. We're 9.3 years into the bull market. It looks like it's due. And you look at 2008, we were only 5.1 years there. Before that, it was 12.8 years, 12.9 years. So you can say that if it doesn't happen this year, although I'm very sure that it will happen this year, it's probably due in another 3 years, like 2021 at least, but I'm sure it's going to happen here, okay? Just look at the historical records here, and of course when you look at what the other experts are saying, this is of course Rich Dad Robert Kiyosaki. He still thinks the market is about to crash. Of course, Kiyosaki has been saying this since 2016, which is what I like, okay, because I think his prediction was really spoiled by the win by President Donald Trump in 2016, who promised to make America great again. But he says here he hasn't given up on the prediction. He told MarketWatch in a late January interview and a series of follow-up emails, and this was in 2017, and it's 2018 and still the market hasn't crashed, which now basically even makes me more confident that the market will crash, because the experts like Kiyosaki have been wrong for quite some time. And so too has Jim Rogers. He was the former partner of George Soros in the Quantum Fund. So he's been saying also, yeah, the biggest crash in my lifetime is coming in April 2018. But he also said that last year in 2017. So once again, they've been sounding this for very long. They are sounding now like a broken record, okay? And this is why the crash is really coming, and you should be preparing yourself.
So in this webinar, based on the input from my mentor, I call him Darcidius, and he has been smack dab accurate, okay? In fact, during the market meltdown earlier this year, he said, don't worry, that's just a correction. And that was right. And such inputs has allowed me to become a top 10 global trader of Saxo Bank. Yes, I am ranked top 10 in the world with a annual returns of more than 100%. And I'm sure I'm going to do very well this year, again, with an excess of more than 100% returns. Now what we are going to tell you is going to shock you, and during this webinar on 26th of August at 10 p.m. Malaysia time, we're going to tell you that if the crash happens, we're going to look at some of the forex instruments that we can go in so that you can take advantage and take a profit. And I'm going to go back in time to previous crashes to see how these instruments have performed, because you know financial markets are fractal. If it's happened before and it happens again, then probably you're going to get the same reaction. So we're going to position you guys, okay? We are going to position you to be able to make money when the markets crash. Now, in order to do this, we'd like you to get ready, okay? We're giving this as an advance warning. We are very pretty sure that it is going to happen by the end of the year. So don't miss the webinar, okay? Mark this date, 26th of August.
So guys, if you look at the local market in Malaysia, this is the stock index, the KLCI, and you know we've been threatening the high of around 1,896. We're not quite there yet, okay, but we're almost there. But even if you really take a look at this, you know, the markets will definitely react, even in Malaysia, to a US crash, basically. So let's go back in time and see what happened during the 2008 crash. You can see there that the index, here it is. This was a high of around 1,524, and it went down in about 10 months or so to a low of 1,018, which is not that bad. Okay, we are really not that bad, but again, there was definitely a very, very big hit on the KLCI, and then it rebounded back. So I think that the market will be well supported basically towards the end of the year. So you guys got to be careful and use any rallies to get out. I'm going to talk more about that in the webinar, okay? And if you look at the ringgit now, you all know that in the 90s the ringgit was basically in a band of 250 to 260. It was pegged to 380 during the Asian currency crisis, and then it went down after we depegged it. Of course, in 2014, as the price of oil went down, the ringgit slowly cropped up and it hit about 440, 450 here, and we're back at 410. So again, a crisis in the emerging markets could once again push the ringgit up, and I'm quite worried about the EM currency crisis, the upcoming one, because you look at what happened to the Turkish lira. It hit 7 to the US dollars, and compare that in 2008, guys. This is going to be really in the string. It's really scary because in 2008 $1 was like 1.16 to the Turkish lira, and now it's around 7. So the crash is coming again, and you see a lot of countries already being hit before the crash. So we in Malaysia have to be extremely cautious.
And we're also gonna actually explain to you some of the terminologies that are going on in this world, so that if you listen to that, then you know what's happening in the market. For example, risk on and risk off, okay? When it's risk on, markets go up. Doesn't that sound weird? Yes, but it is the way it is, because markets go up because people take on more risk. However, when it's risk off, then markets go down because investors then flee, okay? Flee for a safe haven for their money to be parked while the storm is coming through. I mean, you don't want to put your money in to risky assets or risk on assets during market meltdown, right? You're going to lose money. But if you put money in risk off assets that go up, then you are going to make money. And that is what we're going to discuss about in my free webinar, 26 August at 10 p.m. Malaysia time. Don't miss it on Sunday.